Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Tuesday morning, January 15th, with your grain market morning commentary. Currently, we have grains trading a little higher across the board. Corn is steady, 1 to 2 cents higher maybe. Soybeans about 5 to 6 higher right now, and wheat 3 to 4 cents higher. In the outside markets, we have the dollar up a little bit, we have the treasuries up a little bit. That's the risk-off trade. But in the grains, we had a big report on Friday, as you're well aware by now. We had a technical reversal off of that report, and hey, the fundamentals haven't changed. We still have a very tight supply, and this is what the market needs to be concerned with. That's why you're seeing these bull spreads work so good, these old crop, new crop spreads that I keep talking about, because there's a lot of unknowns right now. But what we know for sure, we have a very tight supply. It's a bit uncomfortable. So the near term, the July crop, right now everything's mostly in March, but these spreads are working good. Long July contracts, short November into soybeans or December into corn. That spread has really worked well. Look at those charts. It's a very interesting trade, and I think it will continue to work. So we have even tighter than expected supplies in the corn. The market is up around this 725 or so level right now, March basis. A key level to watch for in the March corn, I think, is 735. A close above that level, I think we'll continue to see that upward momentum. Right now, the question is, if this is able to continue or not. So keep an eye on that 735 in the March corn. In the soybeans, the report on Friday was a bit of a bearish number. No big surprises there in terms of tighter supply or more demand, but the demand side is still supportive. That hasn't gone away. China likes our beans, and we'll continue to see that interest. Now, at this time of year, normally, demand will shift to South America, and we will see a certain amount of that, but it'll end up coming back to the U.S. In the long run. And I'm not convinced that, right now, some of the headlines you see is that, they're concerned about the dry weather that South America is getting right now. I'm not convinced that, that's a real driver just yet at this time. It's more of this technical reversal and the demand side that we see for U.S. Soybeans that I think could move this market higher. Key level there, March basis, soybeans 1445. If we could close above that level, then perhaps, we'll see a little bit of momentum pickup. Go back and revisit that $15 level and see what happens there. In the wheat, now maybe the most bullish fundamental that we have in the wheat at this time is just that there's so many shorts in the market. That's the most volatile of these three big grain markets, is the wheat. And we get a short covering rally, and this market can move real quick. It's gone through a big correction. There's a huge short position, and at some point the demand side will be the headline story. We're keeping an eye on, the drought conditions in Australia, the winter wheat damage in the Ukraine and Russia. And look, conditions aren't ideal here in the U.S. either. So I think at some point it may be a little bit of demand or a scare on a winter wheat crop that sparks this short covering rally. And then perhaps, we could get a little momentum there. A level to watch in the March wheat is 770. It'll close above 770, and the market should, start to see a little bit more upside momentum. That's all I have time for now. There's much more to talk about. Please feel free. Give me a call. 800-826-4124. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.